Now, does Lothar Mentel, Chief Investment Officer of Octopus Investments, agree? Is this going to be a year when M&A picks up after 5 years in the doldrums? Lothar, or lowest for 5 years. Good morning and Happy New Year to you.
Happy New Year.
Are we going to see a pickup in the M&A market in 2010?
I think so. I think so. There will be opportunities out there. There will be opportunities to regain a market position in this reordering of our world economy.
As Poppy says, the dual track process, should we keep an eye on that? Look at the IPOs and that'll give us an idea of where the M&A is going to come from.
I think that's an interesting idea, but I also like her idea of some of these social networking sites going a bit more public. There's so much interest, so for an IPO, definitely the right targets, I would think.
Lothar, the year started with a bang all across the world, equities rising. I did my research. Best first day of the trading year for the stock 600 since 2003. Is this a sign of a good year to come for equity investors?
I certainly prefer a good starting day to a bad starting day, and as we say, sometimes the way the market goes in January, so goes the year. So definitely that's a positive sign. And overall, we at Octopus are quite optimistic overall for 2010, although I think we all have to brace ourselves for a bit of volatility over the course of the year.
How do we best play it then if there's going to be this volatility, as you mentioned?
I think you have to be pretty nimble and fast on your feet to move for different opportunities. We believe the big V-shaped recovery in the stock market is probably coming to an end, and you probably have to diversify away from the cyclicals to stocks where you've got a little bit more earnings forecast security, a bit more transparency there.
Are we going to see companies give more of an outlook? Will there be more transparency in this first quarter reporting season and in the coming quarters? Is that what investors are going to demand now? Because up until now, I think investors were pretty acceptant that there wasn't much visibility. Will they demand it now?
They will demand it, but that's exactly the point where we think they're not necessarily going to get it, because the industry knows as little as we do about how this recession and the recovery from this recession is actually going to pan out exactly. And that's why stocks where that is easier to forecast how they will do, how their earning streams will develop, will do better than those where that's a bit more volatile.
Lothar, we know that the best performing equity markets last year were emerging markets, some rising over 100 or so %. Do you think that theme is going to be repeated in 2010?
Well, I fear not. I think we might well see a rebound of more of the G-7 markets, particularly the US. Eventually, some of the emerging markets, particularly China, have to step on the brakes of the monetary easing. They cannot afford running the economy with a monetary policy that is more geared towards a recession, where they are actually running so strongly. So once they do that, there can well be quite a slowdown in emerging market resurgence, and therefore the G7 countries to catch up.
What's the big theme? What's the big idea that maybe you're trading on, that you're going to invest behind in 2010?
That's the difficult thing. We had a big theme in 2009. It was easy. Equities were cheap. You could make a big bang by going in there. 2010 doesn't quite offer that at the moment. That's going to make life for us money managers a lot harder than 2009 was.
What's your big worry? Is it possibly how central banks, how governments are going to exit their stimulus strategies?
It's actually two things. I already mentioned China.
Yeah.
Once they step on the brakes, what will that do to the global economy? They saved the day last year, but what happens when they slow? And the other thing then obviously is, how will we actually get the monetary tightening that we will eventually have to get? We are quite optimistic that the increase of interest rates will be later on in the year, not so early, because central banks have so many other things that they can tighten first.
Lothar, thanks very much for joining us today. Lothar Mentel there, CIO of Octopus Investments. Right.